Cool. I think we are live, people. Should be good to go. All right, so we've had a big earnings come out for Meta in the last, what was it, hour? I've been listening to the earnings call slowly, just trying to absorb as much as I could before getting into the video here. But I could say for most people, they're probably disappointed from the headline news, but overall, I think the message is still one of growth for Meta and one of growing profits, growing revenue, and the long-term story is still extremely positive. So we're just going to get into, just making the screen not so bright on my face, but one of extreme positivity into the medium term and the long term. So there's not that many companies, I would say, at the moment that are very, I guess, appropriately valued, but they still have a lot of growth going for them. So one of the things I've been trying to say on the channel is, yeah, we've got all these macro ideas that are negative towards the economy perhaps, or at least just neutral, not fully bullish news. But the least that we can do is just pick individual companies that are still expected to do very well. So just double checking everything. Cool. All right, let's get into it. So having a look at the Meta earnings here, just see if I can optimize the screen so you can see as much as you can zoomed in. All right, so yeah, we were predicting here on the channel. I haven't been making any individual company videos lately, just trying to focus on videos that maybe at least 50% of the audience can get around and would love to watch, you know, a very general audience. In the longer term, I am thinking of still doing individual company analysis, commentary, whatever you want to call it, not investment advice, of course, but I do love talking about individual companies. It's really, really interesting. So, and potentially, you know, lucrative in terms of investing. I think the picture for this in sort of the next maybe 6 months, next year, is to do like a members only live streams of company specific earnings or just analysis. That's probably where the channel is going to go, obviously, so we don't have to take sponsors on the channel because we all get sick of, you know, listening to someone plug in an ad for a minute. But anyway, now that I've sort of waffled on long enough for people to log in, let's dive into the Meta earnings. So yeah, revenue came in really strong at 26%, and I love how they put down here where the growth is coming from in terms of ad impressions or just the amount of people using the different apps. So you know, we have obviously Facebook, Instagram, and increasingly WhatsApp. Now I'm going to talk quite a bit about WhatsApp after we go through the earnings, because personally I'm quite bullish behind what WhatsApp could do for the company. But I only found out about 3 or 4 days ago, I was getting a bit too excited, that the WhatsApp news is probably going to be more positive for 2026 rather than, well, obviously this quarter, it wasn't really impactful at all, or even next quarter, but we see that impressions were up 14% year over year, while pricing is still strong and been very consistent, around 10% increase in the average price. So all of that came out to be impactful in terms of a 26% year over year increase in revenue. And that's about what I was plugging in. It's about 24% coming from the underlying company and around 1 to 2% coming from, I guess, the drop in the US dollar. And as we convert other currencies around the world into the US dollar, you can buy more of them. So do they say how much is constant currency? Okay, so a 1% impact in terms of the currency, but it's probably 2%. But I think the biggest negative that we've seen and why we see investors, if we get a more Meta stock, if we just get Google up so we can see, yeah, so we've got about a 7 to 9% swing in terms of, you know, the drop after hours in Meta earnings. Obviously, Meta is my biggest shareholding at the moment. That's not great. You know, obviously lost a bit of money, you know, into the 5 figures at least on that news, but I'm still positive. Where are we? Where's the report? You know, I'm still positive in terms of the medium and the long term for Meta. But the biggest negative I would say is this massive escalation in terms of costs and expenses. They've been only growing that around 10 to 15% in terms of a yearly change for quite a while now, about a year and a half at least. But we have seen a huge jump at $7.5 billion in a single quarter, and that is definitely out of the pattern for Meta. So that has seen the operating margin of Meta drop for once. That's been slowly increasing since 2022 when the company bottomed. So now we've dropped operating margin 43% down to 40%. And the income from operations only increased about 3 billion, where I think I was pricing in around 5.5 billion. So that is not great. We're still growing, taking into account all of this negative news in terms of the costs and expenses, and we'll keep going about the big tax bill. Outpacing costs, above revenue is never a great thing. So that difference, 26% revenue growth, 32% cost increase, that is never going to be great in terms of income. We're still growing the underlying income from operations 18% for Meta. So given the valuation story, which we'll talk about more in a minute, we're pricing the company around a forward P ratio of around a 20. We're still, with all of this negative news, growing 18%. So this company should, in the exciting sector that it's in, it's in ads. That can be a little bit, fluctuating, I guess, but we're still in an AI sector. We're in tech, and we should be getting a much better valuation than the broader market. The broader market, if it was growing revenue 26%, operating earnings growing 18%, then Meta should be priced somewhere around a 25 P ratio at least, if not around a 30. And especially if we look forward to the future, the news is probably going to get just better and better, not worse and worse. So we did see this huge tax bill around $17 billion, which was higher than normal. So that one-off tax bill they see here was $16 billion, and that was a result of the change in the tax code from the Trump tax cuts, or big beautiful bill that was passed. So often what this means is these companies come through, they see a more positive tax environment moving forward, or as they mentioned here, they had to take a change in their deferred tax. Yeah, here we are. Even though they do maybe get access to lower taxes in the medium term, although they do say they're going to increase, they did have to take in terms of an expense for their deferred tax assets. So that's where in the past they had, a bunch of losses that they couldn't, they weren't profitable just yet. So they couldn't take losses against them just yet. So they defer them to the future. They did get a change to the value of that. It is a once-off cost, so we shouldn't see this pop up again in the future. And with the stock market, anything that is short-term in nature, they just don't price it in, or they shouldn't price it in more than maybe a month or a week. So often what I see with these types of declines, so we see here with the price chart of Meta, I wonder if I can hold my head a bit better here. So we've been bouncing around really since, we could go all the way back to really February. We had a big run up from the election. Then we had a scare with the tariffs that may impact how much money can people spend on ads. But we've been in a range-bound environment really for at least 3 months. And this news, all it's doing is taking us back down to the minimum of that range. We're probably going to find support at around $682 a share, maybe exactly where we are, around $687. So that's about an 8-9% drop after hours. But with these short-term, negatives that are not going to impact the company going into the next couple years, usually what we see from this is, we get a big collapse, but then we skyrocket higher. If I can just go back in time, there's only been positive news for Meta over the last couple of years, and that's why most earnings you've seen a pop of around 15%, 10% overnight. But just like we saw in April of 2024, they had a slight negative, expectation of revenue for the next quarter. They were still growing profits. I think they were in the triple-digit year-over-year growth, like doubling their profit compared to 2023. The company collapsed, in a day, 10%, probably down 15% at maximum. And you can see they rebounded. That's only a week. In a week, they recovered all of those losses. So if people, as long as you didn't do like 1-day option contracts, anything crazy like that, I never recommend that on the channel at all. Pretty much you're just guaranteed to lose money. Nothing's a guarantee, but if we didn't do anything crazy like that in the short term, we should make up those gains because that nature of that news is short term. Just double checking, haven't gotten any comments or anything. Feel free to comment questions, whatever you want. While we're live, that would be awesome. But love having a chat to people. So a bunch of that news is short-term in nature. That did collapse the earnings per share from, we were expecting around $7 a share. That dropped down to $1. If we did not have this giant tax bill, so if we plus $16 billion to this, we should have, been pretty much smack bang on for around $7 a share. I don't know if that's worth quickly doing the numbers there. But if we just plus 2.7 plus 16, see how much that was compared to last year. So about 19% growth we should have seen in earnings per share. So yeah, about $7.18, 19 cents per share. That's pretty much exactly what I was expecting there. But, obviously you never know with these earnings. They come out with some random news sometimes. Investors hate to see it. One thing that is a little bit negative in terms of the next couple quarters is they did say maybe because of the big beautiful bill, maybe just normalization back to longer term averages. They are expecting the tax rate to go back to 14%. They were hovering around 11%. So what does that really mean for Meta? That could cut their earnings per share growth by 5% compared to what they've been doing for the last year, but really no company is going to hover at a tax rate of around 11% unless they're doing something kind of shady. So I guess that is one firm piece of negative news for the year, but the fundamentals of the company in terms of growing users, 8% year over year, I just don't know how, well, we do know, but it's amazing how they're still growing users. They're reaching, half the planet, 3.5 billion people. They're still growing 8% each and every year at this point, which is highly impressive. Is there anything else really worth going into the earnings? I'm not quite sure. Where the expenses grew. So yeah, we did see a huge pop, 30% growth in expenses, and pretty much all of it, cost of revenue, but that's just growth in terms of workers, employers. They grew workforce 8% or something compared to last year. But R&D is going to be quite aggressive, and actually even the general and administrative was terrible. Oh my God, that's bad. Nearly doubling year over year. That's not good, is it? Yeah, $4 billion increase in research. R&D, that's kind of acceptable because, well, we knew that was coming. They're spending so much on AI, so much on new employees. That's going to be consistently higher. Yeah, so I think the days of seeing 50% increase in earnings per share year over year, that was always going to be short-term in nature, but that came to a stop much, much more quicker than what we were expecting. It's not much of a surprise, but still not great. Interest and other income. One thing that could be positive about the next year is they have invested in, it's not OpenAI, what's bloody, I forgot what it's bloody. They invested in, who did they buy to get Alexander Wang? Meta acquisition. Oh, they'll get the point. Meta acquisition, what's it called again? Not Rivos, no, Meta acquisition. I forgot the name. Scale AI. They bought it for $15 billion. In this age, I think Scale AI is increasing their revenues, doubling every year at this point, something crazy like that. So that will show up as a interest or other income on the balance sheet. That's usually where that shows up. So if Scale AI doubles in value over the next year in this crazy investment age where everyone's just pumping money into momentum, if OpenAI, they have a 49% share, Facebook does. So if Scale AI increases $15 billion in the next year, then we could see a $7 billion increase if it's, because they own 49% in the other income. That could increase the earnings per share over that couple quarters, whatever, 10, 20% alone. So that's a huge positive that we could see. Anyway, so I think that's pretty much everything from the Meta earnings in that regard. One thing that I did want to point out is I still believe that the earnings estimates, the expectations for Meta stock are still extremely low. So for this year, we're expecting about 17.6% increase for the year. Next quarter, we should be growing around 30%. So overall, should be growing this year around 25% on average. Then next year, we're probably going to continue growing around 25-30%. So if we crunch those numbers, I believe it comes out somewhere around, well, let's actually just do it. Let's crunch those estimates. So this year, we're probably underestimating by about 10%. Next year, if we just do our own numbers of, let's say 30%, I think that's not conservative, but pretty moderate estimate. We could reach EPS next year of around 40 for Facebook, maybe 35 as like a very low estimate. But let's just say 40 earnings per share using the after hours current valuation, because that's what it is right now. I can't imagine it's going to open up with a huge positive after all this bad news, but 690 divided by 40. So it's actually much less than I thought. I thought it was going to be 19, but 698. No, it's actually better than that. 690 divided by 40. So we have an earnings per share, 4P ratio moving forward of 17.3. That is insane for a company that's growing 25%, 30% Earnings per share next year, revenue's growing at 26%, and yet we're pricing Meta at a 17. That is pretty much exactly what's happening to Google as of about 6 months ago. And look what happened to Google. I'll actually cover Google earnings on here as well. But before we move on, I just want to run through, if I'll hide my face a little bit, just the WhatsApp story. Now, I think this is going to be giving Facebook this message. Yeah, we're growing using AI to make the app more engaging, making it easy for advertisers. They're willing to pay more. Yeah, we're going to see revenue growth between 20 and 26% moving forward. And that's actually accelerating, which should be great for the company. But I think for the next year, 2-3 years even, we're seeing this story about WhatsApp, where they're putting ads in the status or update area of WhatsApp. If you know what that is, that's great. If not, it's fine. It's basically like like flicking through Instagram, you get a random story. That's 3 billion users, and in terms of monetizing that, imagine what that's going to do to impressions. Impressions were growing, was it 16%? Let's actually see what impressions we're doing. So that's all pretty much without WhatsApp already. They did announce it back in June. Halfway through, they're going to monetize WhatsApp, but it hasn't started really at all, like 0% if you round it. So they're growing impressions 14%. Imagine what that's going to do when we get ads to 3 billion people. We could see impressions grow 20-25% year over year next year. That's just nuts. But just to make it super clear, what is going on with the WhatsApp rollout? They're only testing via beta testers. So all these beta people. So that's through Google and the iOS. You have to sign in to be a beta tester, I believe, which might only be, I think I saw somewhere, tens of thousands of people. Don't quote me on that. That's just what ChatGPT, usually they give me a better description here. India and Brazil first. So maybe people are seeing them in America, maybe not. I know that WhatsApp in India is I think it's like 300 million people or something. So they're getting them first, but it's pretty much, not even rounded to zero. That's the impact we're seeing already. But most of that impact, that's kind of a waste of time, that was. But the rollout hasn't started yet. They're saying, especially for the EU, hasn't even regulated that they're allowed to show ads in WhatsApp yet. So EU's 6 months behind everyone else. So that boon or the positive to Meta is coming in the next couple years. So in terms of what that means for Meta as a stock, if I just collapse down the price chart a little bit, hide my face. So if we just say, look, growing revenue at 25% year over year, maybe that slows down a little bit, but Facebook should be worth at least a 27 forward P ratio, currently around 17.3, 56% move higher just because of a valuation correction. That's not based on time or anything like that. So that's around a 1,200 stock price for Meta. And that's if nothing really changes. So that's just a normalization of valuations. But if we also add in the story of the next year, if we add in, let's say, 30% increase to earnings per share, that's a double up. And that would be by the end of next year. Again, if valuations go back to what I would call an appropriate level. Nothing's guaranteed. You can't take that for granted, of course. But what that does mean is we're sitting in a very attractive valuation position. And unless we have a recession, a stock market collapse, whatever that is, 10% chance, 20% chance of that happening in the next year. Unless that happens, then Meta is sitting in a fantastic place. And like I said before, that is going to be similar to what we saw for Google not that long ago. So just double checking the stream's still going. Yep. So Google, not that long ago, we were saying this type of message for Google percent. Actually, no, let's go regular. So Google a year ago, let's say September last year, that's about the same place. We were seeing a forward P ratio of around a 16, 17 for Google, growing about the same as what Meta's doing now, maybe less attractive revenue growth. And see what happened to Google over the next year. It increased 86%. Now, I'm pretty much officially going to sell out all of my Google gains. I think I gained 56% just in that model portfolio. And I bought that around June of this year. That's when the portfolio started. So I'm going to sell all those gains. Obviously, I'm not taking a tax gain or loss for that model portfolio. It's mainly just for whatever you want to call it, theoretical discussions. But So moving that gain from Google into Meta. Now that has been reflected in my own personal portfolios. I did sell out of Google personally a little bit ago, probably around this area here. What's that? Sort of mid-September, but officially in the portfolio, transitioning all of that to Meta, because I just don't see any other company with that same risk reward portfolio performance ahead of us. But let's get into the Google earnings, because they did pop after hours about 10% or so, which is very impressive. Kind of made me wish I didn't sell out of Google in my personal portfolio. But anyway, so Google here, let's just see why they're, I haven't even read Google's yet. I've just been diving into Meta. So we see here Google service, and let's just go to the summary table. So revenue growth, 16% because of currency. Yeah, 10% less than Facebook, but whatever. Margins slightly increased, which, oh no, 2025 is on the right this time. So constant currency, going to grow 15%, 31% operating margin. So it actually went down, Google. What is going on? Other income, 12 billion. That's why they're going up after hours. $2.87, probably a surprise of around 20%, 30%. So that's probably why it's gone up. So let's just see where Google's going so well. So overall, the ads business, yeah, YouTube's only growing about 11, 12%. Overall ads, about 10%. So yeah, advertising business is growing. Yeah, 10%. Ooh, Google Cloud, not bad. Growing 40 something, 35%. Let's actually crunch that. So what's their cloud growing? It's way better than AWS is doing. 34% growth in cloud for Google. That's not bad. Okay, hedging. Okay, total employees went up. Yep, that's all kinda. Now Google services. Yeah, operations only grew around 10%. That's still less than Meta. And Meta had a huge negative cost with that tax bill. I wonder if Google had a cost tax. Let's go to see the Google's tax. Let's see if they had another other income, huge income. Okay, they did have a bit of an increase, nearly double in terms of their tax. Yeah, they're all sort of getting hit, these big tech companies, by the same tax bill. So why is Google going up 8%? That's interesting. Cost of revenues grew. Yeah, maybe they're keeping their costs a bit more under wraps. R&D only went up 15%. That's probably why. Where is this one off? Where is this one off? Other income. Other income. They usually have an other income area. It might be down below. Other income. Segment. Other income. No. Here we are. Other income. Gain loss on equity. I wonder if that is to do with Waymo. Oh, damn. I did price that in for Google, but it just, yeah, it took too long. Net gain of 10.7 billion. I reckon that's from Waymo, unless they've mentioned it somewhere else. That is awesome. Google's set up in such a good position, which I loved buying them. Forward P ratio of 16. That's just another lesson here. When you can get such a great company at a low P ratio, and for some reason, people love doing it to big tech, which is why I love investing in big tech, buying them when they're at a low price, going in heavy, and then just riding up. And the news is almost always positive. Like, what do you hate about investing in big tech companies? It's just insane. So that's it for Google. I'm not going to go into too much more. What was their earnings surprise? 26%. Yeah, it's about the same as Meta if you took out the tax. That's with the tax bill for Google. That's very good. Now, we also have one more news. The Fed cut interest rates. Now, I'm not going to spend too much time on this. Let's see what that did to the bond market. Volatility. Oh, the bond market went down, so interest rates went up. So they're pricing in some inflation because of the Fed tax cuts. But let's have a look here. So the Fed, they cut interest rates, another 0.25% cut, I believe. So now they're sitting at an interest rate of, we'll let this load. What's that? 4%, and they're pricing in 67% chance of another cut. That was 9% before the meeting, so it must have been. There's no point even listening to the to his talk. You're going to see what happens in the probability markets, but pretty much he's pricing in aggressive interest rate cuts. That'll be 3 in a row. So why would the Fed be cutting interest rates if the economy was strong? That's something we've been talking on the channel quite a bit. That the economy is not going that well for most people. Video coming out, I think in 24 hours, you know, my polished type of videos, that the top 10% of people are doing very well, but the bottom 90 are just struggling. So that's interesting. Now, did he Did he cut balance sheet runoff? I think that's the way they just cut it. 0.2 around. And puts an end to quantitative tightening. That is so funny. So, yeah. So they were burning, what was it, about $30 billion a month of assets. Just burning that from the balance sheet, which should have been deflationary, hurting banks, hurting lending, all that stuff, sort of slight tightening every single month. But as soon as we had, what was I've bloody forgotten all these names because I haven't looked into the Fed for like a number of months now. Sort of stopped looking into that with the other channel closing. But what do you call it again? Oh, I've forgotten the bloody names of everything. It's funny when you go live, you start just, your brain just goes blank. But yeah, so as soon as they had the spare cash account, so if someone knows what I'm talking about, comment down below. So we had the spare account. Let's go Fred money balance account. I've totally forgotten the bloody name. Soon as we had total assets, current accounts. No, that's not it. As soon as the spare money ran out from the Fed, then they stopped their quantitative. Yeah, this is so funny from the Fed. Since 2022, yeah, been printing money. Oh, we've been burning $30-50 billion a month to try and stop inflation. But they don't talk about the spare money account. The reverse repo, that's what I'm talking about. Fred. That's why when you don't look at something for like 2 months, you just bloody forget it. Reverse repo, as soon as we hit zero in this spare money account, I'll explain roughly what this is in a second, but as soon as we hit zero in that September, literally like clockwork, a month later, they stopped burning cash out of existence. So anyway, the reverse repo pretty much invented after 2020. They printed $4 trillion for the economy. They realized, shit, we printed too much, like literally doubled what we needed. So they shoved $2 trillion into a spare account, which basically what that means is banks, JP Morgans of the world, Wells Fargo, could put their money that would just hand over fist, just thrown from the Fed at them, put it into the reverse repo to get some interest rate at the interest rate of the Fed funds rate. And then as soon as the Fed runs it, basically all of this, all of this chart of money deletion from the Fed came just straight out of the reverse repo. What do we cut? Let me guess, $2.2 trillion, about 8.3 down to 6 trillion. How much did we lose from the reverse repo? 2.2 trillion. I would love to swear right now, but they burnt effing nothing. So all of those lies about trying to reduce inflation, they didn't cut interest rates, they just burnt the spare money they printed, and it affected net zero on the economy for 2 years. So that's why we do have to dig deeper on this channel and together share information, because pretty much everyone's just getting lied to. You know, what else would you call that? And they don't talk about this. Sorry, they don't talk about the reverse repo to the people in those Fed meetings. They only talk about interest rates and the balance sheet. Oh, sorry, we forgot to mention the reverse repo because, don't want you guys knowing too much information. But anyway, that's pretty much all I had for you guys today. Going through those Meta earnings, I'm not worried at all. I just see this as another buying opportunity. Selling a few other investments, just doubling down on Meta, because I just see the risk and rewards still being super attractive. Anyway, thanks for the support, guys. Just trying out a live stream, see how it went. I might do this in the future. I'm just kind of testing it out. So let me know what you think down below. Thanks for your time today, guys. Hope you have a wonderful day. See ya.